What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. This is a market that we watch extremely closely on an intraday basis, and what you'll notice today is quite a significant level was recaptured. That is, of course, this set of lows, and it was potentially going to offer some resistance here for a lower high, but on the daily, we did close above that level. That, of course, was 450 up to roughly 450.75, depending on how you wanted to split the difference. So to me, a huge milestone was just recaptured in the S&P 500. And the way that it happened was fairly incredible too. I mean, we basically had this massive tightening pattern into the afternoon today, an ascending triangle, right? And in the last hour of the day, we did break that to the upside. And it's happening on some decent volume, right? It's not like volume was low like we saw midday. So because of that, I'm going to have a little bit more confidence in this move higher as opposed to less confidence. However, we have to at least acknowledge that there wasn't really enough time in the day to determine whether or not these prices are fair. In a market profile term, we would start to consider this a spike, correct? So because of that, there's a couple of situations I want us to pay attention to. Anything that opens above 450.75, fantastic. We're opening on the bullish side of the market above all of those highs where that consolidation pattern was taking place, and we should be looking for more sellers up above, aka maybe the resistance trend line or this horizontal area we've had mapped out close to 460 quarter. If we open below, that's a bearish rejection of this spike higher into the afternoon, and to me, it would start to indicate that, okay, maybe the buyers got a little bit ahead of themselves on this move here, and we need to spend more time consolidating in today's range. So you would, of course, be looking for something like this to offer some support. Let's put that level in here. Today's low is almost the same exact place where we got that little end of day push yesterday as well. It's roughly let's call that 447, right? So any consolidation in here still builds the bullish case, noting that we are starting to put more pressure against that 450 level from the daily time frame. It just wouldn't be as bullish as opening above 450.75 as we pointed out. So if we break under today's low, then to me, maybe this is going to be a lower high, and there's potential. It's all going to really ride upon the top end of that 5-day balance here around 443.50. That's really the next line in the sand if this turns around, right? And as things sit right now, the chart would not suggest this as a likely scenario, but I do want you to be prepared for anything. The market's been absolutely insane in the early parts here of 2022, so I wouldn't be surprised, right? Nothing really catches me as a surprise these days. So if it does roll over, this is still your line in the sand at 443.50. Anything that bounces off of it and reattempts 450, to me, beautiful setup. On the daily, we have a break, retest, and now we have a higher low coming into that recapture area. Maybe it sets out the breakout for something like that into 460.25. Again, very speculative in terms of what I'm thinking about here, but I like to walk you through all of the scenarios and what's going on kind of up in my head. So that's what I'm seeing inside of our S&P 500s. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.